So good morning, everyone. Welcome to the webinar. So glad that our friend and colleague, Bill Vaughn from UH1 could join us today to go over short-term and ancillary health insurance plans. A little bit of housekeeping. If you got a question, you throw it in the question box. I'll be monitoring these throughout the presentation. And of course, we'll do some more Q&A at the very end of the presentation. And so we're the dynamic duo of the individual world. And I'm the business development manager for Cornerstone, and we are a part of Risk Strategies now, but our brand is Cornerstone, and it will always be Cornerstone. So still call me Cornerstone. There's my email address, crnstone.com. Carla Winfrey is an individual specialist. She works behind the scenes and keeps brokers in the fairway and out of the rough. You know, she keeps things moving. There's so many things that she does, including looking at delinquency reports, billing issues, even, you know, might be a claims glitch here or there. There's a million and one things that Carla helps us out with. So there's her email address as well. We love Carla. And I want to boldly proclaim that 2026 Broker Expo, the third annual Individual Broker Expo, is going to be held on May 6th, 2026 in the Dayton area in Centerville, Ohio, to be specific, right off I-75. I know many of you are familiar with that. It's going to be at Yankee Trace. So mark your calendars. We'll be sending invitations out in the next several weeks. And we look to see all of you, including Bill Vaughn, at the presentation. In the past years, we've held them up north, namely in the Toledo and Cleveland area. This time we're heading south, trying to capture more of the southwestern Ohio, central Ohio market. So we're going to be delighted to host this event for you. It is a cavalcade of individual information. CE will be provided, an emphasis on ICRAs, and of course ACA and Ancillary. And call me, email me, whatever, if you have more questions about that. But we hope to see you on May 6th in Centerville. And with that, I'm going to toss the keys to Bill Vaughn. So Bill, I'm going to stop sharing. Did those slides come over for you pretty easily, Bill? Did you see my stuff?
Yes.
Okay, so
thank you.
Great. By all means, if you got any questions about the expo, catch me afterwards, and I'm just going to monitor, see any questions at the outset here. No? So great. Welcome aboard, everybody. Take it away, Bill.
Great. Can you see my screen okay, Jeff?
I can. Yeah.
Well, great. Well, and thank you everyone for attending this morning. And, you know, I will tell you that from United Healthcare's standpoint, Cornerstone is one of our top tier FMO field marketing organization distribution partners. We really enjoy the partnership that we have with Cornerstone, and it's always nice to talk to the agents as well. Just to sort of put the puzzle together for you on United Healthcare. You know, we're a big company. Our group, employer-based insurance, our Medicare division, our Medicaid. You know, we also are the largest carriers of Medicaid in all the different states. My piece of the puzzle with United Healthcare, UnitedHealthOne, which many of you know is the Golden Rule Insurance Company. We do the individual core products, short-term medical, tri-term medical, Health Protector Guard 3, which is a fixed indemnity. And then along with that, we have all of our ancillary plans that help with out-of-pocket cost on especially some of the high deductible plans. And Jeff asked for me today just to sort of, you know, share our story with you, and then also talk to you a little bit about the products, how to position the products. I certainly don't mind, you know, if you have questions, if you put them in the chat box, and Jeff, if you see anything that pops in there, please interrupt me so that we can, answer the question when it's still fresh on everyone's mind. So my title is FMO account executive. I have 24 FMOs, Cornerstone being one of them around the country. And Jeff mentioned earlier, on May 6th, Cornerstone has their broker event, and we are very happy that Jeff and Ryan Carroll invited us to the event. We were there last year, top-notch event. I thought, and I go to quite a few of these, but I would put their event in at least the top 10% of all the ones that I attend. So congratulations, Jeff. You guys just do great job. So
thank you.
This is a look at our product portfolio. At the top, as I just mentioned, is our short-term medical, which all of you know, most of you know that sell the short-term plans. We were able to get that in the state of Ohio. I think it was November. Jeff, you may know better than I do exactly when that landed in Ohio. And quite a few of the Cornerstone downline agents, you all just did a great job in promoting those products out there. So thank you for the business. In the gold highlighted area, that's our primary ancillary products. You'll see dental-wise, dental-wise, standalone dental plan, vision-wise, standalone vision. We also have a DVH product, which is really hot with the post-65 Medicare senior crowd. DVH is dental, vision, and hearing. You'll see that on your e-store as well. A couple of different versions of our accident plans, which I'll talk just very briefly about at the end of today's presentation to you. We have a critical guard product, critical illness, an Advantage Guard product, which is a post-65 hospital indemnity plan, which pairs nicely with any Medicare Advantage plan out there for those of you that sell to the over 65 senior community. Hospital wise, Jeff asked me to speak a little bit about that. That's a hospital indemnity product. And you can also see to the right of that chart, the market that they serve. Most of them serve both the under 65 and over 65 market. To the right of that, you'll see that most of those ancillary plans are guarantee issue, or they have a guarantee issue option and a simplified issue option. Simplified issue, most of you know, just means with us, it's the way the client answers the question on the application. So as an example of a short term or a fixed indemnity, which is simplified issue, the question on the application may read, has anyone applying for coverage in the last 5 years had a heart attack, cancer, stroke, the major things? And if they answer yes on a simplified issue application, it won't allow you in completing the application for the client, or the client completing the application, to move forward in the application, because that would be something that our underwriting department wouldn't underwrite as a risk. So this is our state map, or our country map, excuse me. In 49 states, we offer more than 3 products. In, I don't know, I guess 3 states, we offer 3 or less products, but you can see that our map is very well filled out. The gray area that you'll see up in the state of New York, Connecticut, New Jersey, Massachusetts, and New Hampshire, we have no products in those states. So our map is pretty well filled out for those of you that may have appointments in other states in the country. This is a screenshot, and this is our product grid that we have on your back office, UnitedHealthOne Golden Rule back office, what we call e-store. And this is on the main page. It's our product grid. So it kind of give you a quick glance all of our different plans that we offer, starting with short term at the top, our tri-term medical, our fixed indemnity insurance, and then the ancillary plans. And you can see that the map is very well filled out across the states at the top. So first of all, I'd like to take a look at our short-term plans. And as I said, in the state of Ohio, those are up to 12 months, which that began in November of 2025. But for over 30 years, we've been offering quality short-term medical plans to our clients. And here's basically a look at the states, pardon me. These are the states where we have short-term plans. I think I counted yesterday, there's 26. We are going to be offering 12-month short-term plans in South Carolina. That's going to queue up for early to mid-May of this year, 2026. So that'll put us in 27 states. Most of these states are 12-month short-term medical plans. Primarily, there are 6 different short-term medical plans available, and the range of plan really offers you and your client pricing and coverage flexibility. Now, I'm not going to be talking in detail about our hospital and surgical short-term plans, but as the name implies, hospital and surgical primarily covers hospital and surgical benefits. These plans have their own brochure, so just make sure that you review your e-store back office for more product details on those. But now we're going to take a look at the 5 main plans on short term. The first plan is Value, then Plus, Plus Elite, Premier Elite, and finally Copay. So we have 5 different versions of short-term plans to choose from. The client can choose one. Pardon me, got a frog in my throat. The client can choose one of 4 per term deductibles. The choices are between $2,500 and $15,000. The deductible is per covered person with a maximum of 2 per family. Short-term medical plus has a 20% co-insurance, and the client has a co-insurance out-of-pocket max of $2,000 after the chosen deductible for in-network expenses. Our next plans are Premier Elite and Plus Elite. These include a lifetime maximum of $2 million per covered person. Both plans have no co-insurance or out-of-pocket after the deductible has been met. The plan pays 100% primarily for eligible benefits. For Plus Elite only, the client can choose one of 5 per term deductibles. The choices range between $2,500 and $15,000. The deductible is per covered person with a maximum of 2 per family. Value, of course, is the lowest price plan overall and includes a lifetime maximum of $1 million per covered person. So you can see that we really offer short-term plans with 5 different versions and a lot of different deductible option. And the rule of thumb that the higher the deductible, the lower the monthly premium. Conversely, the lower deductible, the higher the monthly premium. So we really do have a fit for all clients and all budgets.
If I could jump in here real quick,
yes,
Bill.
sir.
I mean, from what you're seeing, and what is there a plan that maybe is more popular than others, or are they equally distributed?
Well, the short-term medical plus, Jeff, has always been our most popular seller, if you will.
Okay.
And I think it's a balance between wallet space, budget, and coverage, but also because of the low co-insurance amount out of pocket after the deductible has been met. We have seen that the copay short-term plan sort of ebbs and flows.
Right.
And they're just people that just like that comfortable, that comfort of having a copay for doctor visits and prescriptions versus deductible and co-insurance after the contracted network rate. But Plus is probably the most popular, to answer your question.
And I love the fact that you have a $2 million max on 3 of those plans. And, that's huge because, in years past, a lot of the short-term products were only $1 million, which is still a lot of money, but that's robust coverage right there.
Yeah, that can certainly take care of most things. For the Premier Elite only, the client can choose one of 3 family deductibles. The deductibles are 5, 10, or 14,000. The family deductible, of course, is per term with only one deductible to meet for all covered family members combined. Now let's take a quick look at the medical benefits. With short-term medical value, office visits don't have a copay, of course. They are covered subject to the plan's deductible and the 30% coinsurance. But keep in mind that with the UHC Choice Plus network, your clients can save about half with the contract and negotiated rate for covered services, which would include in-network doctor office visits. A long time ago, I used to sell these plans just like you all did, and I used to train quite a few agents within United Healthcare on positioning our products. And you know, it's always good to explain to the client exactly how a doctor office visit would work if they're on a plan that the doctor visits are covered subject to deductible and coinsurance. So the example that I used to give out was, you know, you go see a doctor in network. The average price of a general practitioner in the U.S. is about $130 for an illness or an injury visit to the doctor. Doctor's going to file the claim with us, with our claim center at United Healthcare. We're going to reprice that at our contracted rate. That's going to bring that doctor visit down by about half. So from 130, you're going to go down to 68 or 69. You pay that 68 or 69. That 68 or 69 goes towards partial settlement of your deductible. And then if you're in coinsurance, it will go into that versus having a $50 copay for a doctor visit. So people that don't really use insurance a lot, that's probably why they go, Jeff, back to the Plus or the Plus Elite, Premier Elite, or the Value plan, because if they only go a couple times a year at max, it's really not worth the extra premium dollars to step up to the copay. So the plan does feature a $50 copay for urgent care visits, which are not subject to the plan's deductible or coinsurance. But for preventative care, the emergency room for accident and illness, inpatient hospital services, outpatient surgery, labs, and x-rays, there is no copay, and they are all covered subject to the plan's deductible and coinsurance. Preventative care is subject to what's outlined in the policy certificate that the client will get online or in the mail with us. All the plan details are always included in the product brochure. In fact, the slides that you've been seeing here are just screenshots that I took from the short-term brochure. So that's all available to you and your client at any time. For the Premier Elite and Plus Elite, office visits don't have a copay again. They're covered at 100% coinsurance after the client has met their deductible. With a short-term medical copay, both doctor visits and urgent care visits are covered with a $50 copay. Doctor office visits, however, are 4 visits per person per term, depending on the duration of the plan. Subsequent visits beyond that limit are subject to deductible and coinsurance. Lastly, let's take a quick look at the pharmacy benefits. For all 5 plans, outpatient prescription drugs, which are Tier 1 prescriptions, have a simple $25 copay, no deductible. For the copay and plus plans, Tier 2, 3, and 4 drugs are covered at a 20% coinsurance level after they meet their deductible. Premier Elite and Plus Elite, Tier 2 through Tier 4, no charge after deductible is met. And with the value plan, Tier 2, 3, 4 drugs are covered at a 30% coinsurance level after the insured meets their deductible. Jeff, I wanted to ask you before I go into Tri-Term Medical, I did see on your note that you may want to talk about short-term, tri-term, but do we have agents on the call today that are appointed in tri-term states? I certainly don't want to.
I would go ahead. I mean, that's, you know, we are really 3 or 4 states in coverage, namely Indiana, Kentucky, which are both tri-term states.
Yes.
I don't believe Michigan is, or is it? Is Michigan?
No. Well,
okay.
Let's go ahead. We'll just go through this. I'll try to go through it.
Yeah.
Just remember that the folks, the Tri-Term Medical it's filed in the state as a 3-year. It's 3 consecutive 12-month terms less 1 day but it's a short-term plan. So some of the things that you see in the tri-term product would also be applicable to a 12-month short-term. Not exactly, but there are similarities. So, and by far, the tri-term medical plan is our most popular plan. It's our most profitable plan as well. Here are the states that we're in. Of course, you don't see Ohio, but as Jeff said, Indiana, Kentucky, some other states that you may be in, Tennessee, not sure. I know that's close to Ohio, where most of the agents are. We're in about 13 states there. Again, South Carolina, early to mid-May. We're going to go back into that the tri-term 3-year market. I wanted to show you this for those folks that do have appointments in states where you may have clients. What we experienced this year in with our company, because of the enhanced subsidies not being approved, just to show you an example here, using tri-term as an alternative to the ACA. If you'll focus your eyes on the bottom left of the screen, these are quotes for a family of 4 in Miami-Dade County. That's sort of the average quote that we use around the United States when we quote to give examples like this. But as an example, this family of 4, 2 adults, 2 children, the cost for a silver plan at the bottom left of the screen with the enhanced subsidies in place, monthly premium $885 a month. Without those enhanced subsidies, which have still not been approved for the ACA, that doubles to $1,645 per month. Same goes true, if you will, for a bronze plan, $478 per month for this family of 4. It almost triples to $1,238 per month without the enhanced subsidies. If you look at the top right of the screen, this particular quote for this same family on one of our tri-term medical plans, 3 years of coverage, $954. If you follow the orange arrows down, you can see the silver plan at $1,645. Even if we throw in the tri-term medical copay select max, which is the most popular 3-year tri-term plan with a $10,000 deductible, a critical illness product, critical guard, an accident plan, the premium at $1,000 a month versus the ACA silver plan at $1,645 still saves the client about $600 out of pocket. $600 for a family of 4, it's worth the savings and it's worth the look. This next screen just shows what's in it for the agents, to help support you, to help support your business. If you look at the third column there, first year broker commissions on selling that tri-term medical that I just showed you, that one policy, $29.19, adding in the critical illness product, $428 in commissions to you at the broker level, $247 for the accident plan, for a total first year commissions of almost $3,600 versus the ACA at a total of $960. We use $20 per member per month to figure that. That represents about a 374% increase in first year commissions on using the tri-term as an alternative to the ACA. So your clients are going to appreciate the stability of having the same health insurance plan for up to 3 years. These plans have coverage for preventative care, office visits, prescription drugs, hospitalizations, surgeries, diagnostic testing, and more, all at a more affordable price. The tri-term medical plans are likely to expand your client base because these plans are specifically designed to offer the expanded benefits, longer coverage duration, expanded coverage for pre-existing conditions compared to a short-term medical plan at a budget-friendly price. The tri-term medical plans are medically underwritten and are not Affordable Care Act ACA plans, but they just may be what your clients are looking for because tri-term medical plans are designed with pre-ACA major medical plans in mind. Many tri-term medical plans include coverage for prescription drugs, preventative care, and office visits. Benefits like these, click too quick. Benefits like these for the term length of coverage, which is 3 years less 1 day, can all help increase your client persistency, which is just basically the equivalent of how long does that policy stay on the books with you. Tri-term medical plans are designed to offer familiar health benefits that help meet the common insurance needs of most people. We're going to take an in-depth look at those plans in just a moment. The tri-term medical plans provide a few things that really make them stand out from other plans on the market. Subject to medical underwriting and approval, pre-existing conditions are covered for eligible expenses after the first 12 months on the plan. This feature really sets tri-term medical plans apart from traditional short-term medical plans. The client's coverage duration also continues for 1 day, less 3 years in most states. Tri-term medical plans offer your clients quality coverage for a longer period of time. This means that you can spend less time rewriting existing business and more time finding brand new clients. Because these plans are designed to offer terms that equal 1 day, less 3 years, the tri-term plans can also help offer coverage for more common medical services like office visits, outpatient prescription drugs, emergency services, as well as inpatient and outpatient hospital services. As you know, the benefit levels associated with these plans are extremely important. So always just make sure that you review the brochure on your back office broker portal, eStore, when discussing plans with your client and providing an accurate plan description to your client. The tri-term medical plans offer a lot of flexibility. Imagine a dial where you can move the dial to increase the coverage or lower the monthly premium. It's important to know that each one of these plans have their own deductible, their own coinsurance, and their own out-of-pocket limits. There are primarily 5 tri-term plans available. The hospital and surgical plan, just like with the short-term plans that I discussed with you a few moments ago, won't be discussed here due to the significant difference in benefit structure. But again, as the name implies, hospital and surgical benefits cover hospital and surgical services. But here's a quick look at the other tri-term plans. The first plan is a Copay Select Max. This plan offers a benefit design that many customers are already familiar with the familiarity and the comfort of having a copay plan. The Plan 80 Max has an easy to understand plan design, and Plan 100 Max offers a more robust plan design. The last plan is value, and this of course offers the lowest monthly premium for the client. Since there are 4 plans, there are some important differences to note, and I'm going to point those out for you here real quick. Again, what you see on the screen is just basically a screenshot of what I took from the broker portal on the different brochures. So this is all available to you. This is a lot of information. I understand. I certainly wouldn't expect anyone to remember even 10% of this, but it's all available in your eStore as a reminder. So Copay Select Max and Plan 80 Max offer 5 per person per term deductibles ranging from $2,500 to $12,500. Plan 100 Max offers 4 per person per term deductible choices from $5,000 to $12,500. Value offers all of these deductible choices plus a lower monthly premium option with a $15,000 deductible. All 4 plans require that a maximum of only 2 deductibles be met per family per term. Once those 2 deductibles are met, all covered persons on the plan are covered at the plan's coinsurance level until they hit their max out of pocket. Speaking of coinsurance, Jeff had brought this up earlier. Copay Select Max has a 30% coinsurance after the deductible and coinsurance with an out-of-pocket max on the coinsurance of $4,500. Plan 80 Max, clients have a 20% coinsurance and coinsurance out of pocket of $2,000. Plan 100, the reason we named it that plan, Max has no coinsurance at all. So once they hit the deductible, we pay 100% of covered charges up to the $2 million that Jeff pointed out earlier. Value has a 30 or 50% coinsurance option with a $10,000 max out of pocket coinsurance. The 4 plans have the same lifetime maximum. It's $2 million per covered person for the lifetime of the plan. Copay Select Max, excuse me. Copay Select Max, the client's prescription, pardon me. I think I clicked too quick there, but Copay Select Max, the client's prescription drugs are covered with a 4. There's our prescription drugs. Copay Select Max, the client's prescription drugs are covered with a 4-tier prescription copay. With many common tier 1 prescriptions, the client will have a $25 copay. The tiers 2, 3, and 4 are subject to a $500 deductible per term per person. After that, the tier 2 prescriptions have a $55 copay, tier 3, $75, and tier 4, 50%. With plan 80 max and 100 max, prescription drugs again are subject to the deductible and co-insurance, but the client will also automatically receive a preferred price card. With this, the client's going to pay at the point of sale at the lowest price available. The discount does vary based upon drug and the pharmacy being used. Now, value doesn't cover prescription drugs. However, the client will still automatically receive a prescription drug discount card. Clients can apply any time of the year with the tri-term medical plans. There is no open enrollment period. The earliest effective date for the client is 5 days after the application is received. All coverage, of course, is subject to underwriting approval and payment of the first premium. Depending on the client's needs, it's often important for them to have flexibility in their choice of healthcare providers. The tri-term medical plans offer the nationwide United Healthcare Choice or Choice Plus network. These networks are included in all 50 states in the USA. They not only offer freedom of choice for in-network doctor. Additionally, no referrals or pre-authorizations are required to see a specialist. Also, with United Healthcare Networks, clients can benefit from in-network pricing discounts on covered expenses. The networks offer access to over 1.8 million physicians and other healthcare professionals nationwide, and approximately 7,200 hospitals and other facilities across the United States. These plans travel very well coast to coast. No primary care physician is needed, and no referral is required to see a specialist. This means clients have their choice of network providers in other parts of the country, just like they would in their small hometown. Using network providers means clients can save money. Those providers have agreed to offer discounts for covered services. The average discount with United Healthcare Choice Plus network is about 58%, so that's over half. The tri-term medical plans are medically underwritten, as I said before, and eligible expenses for pre-existing conditions are covered after 12 months of being on the plan. This means that a condition may not be covered during the first term, might be considered for coverage during the second term, and the third term for members that have been on the plan since issuance. Any eligible conditions that are determined to not be pre-existing after the effective date will continue to be covered under all 3 terms. The primary insured must be between the ages of 19 and 63 years of age when the policy or certificate is issued. Applications will not be accepted if the primary is 64 or older. Dependents must be younger than 26 at the time of application and can remain on the plan until the policy or certificate ends. Applications will not be accepted if the primary is 64 or older. So what that means, if you're working with a client over the age of 62, it's a good idea to list the younger spouse as a primary insured. As mentioned earlier, these plans are medically underwritten, and the applicant's height and weight play an important role in the underwriting process. The height and weight charts can be viewed when you're quoting the client the product. Accurate height and weight measurements must be provided for all applicants 19 and older. Applicants 18 and younger will be treated as if they are within the optimal height-weight build ratio. Your applicant's height and weight will be one of the factors in determining if they are eligible for a tri-term medical plan and if they would be subject to a higher premium if they fall outside of the weight range. The application may be declined if the weight is beyond the minimum or the maximum amount. Some of the medical conditions present an increased risk. Here are some examples of conditions that would likely result in a tri-term medical plan application being declined. As you can see on the chart, diabetes is a declinable condition. However, this does not include gestational diabetes. Clients also have the flexibility when it comes to making their payments. The preferred method of payment for all of our plans is always EFT with an account and routing number. Why, you ask? Because it has been proven that clients using EFT with monthly withdrawals for health insurance increases the policy's persistency. In other words, with EFT, the policies stay on your books longer, benefiting you as the agent and your clients. However, push come to shove, we will accept a credit card. Payment will not be processed until the plan has been issued or the effective date, whichever is later. Also, in most states, tri-term medical plans have a non-refundable one-time application fee of $40 with the initial premium. The client will also receive one ID card that will be used for the duration of the coverage. Also, if the client should cancel their tri-term medical plan coverage during any of the 3 terms, they'll receive a refund of their unused premium. Just to kind of explain that, I get that question a lot from agents. Refund of unused premium. Let's say the clients had the policy for 6 months or whatever the case may be, and they paid for the next 30 days of coverage, and 15 days into that 30-day coverage period, they cancel or terminate the plan. We actually refund them 50% of that month. So that's what we say. That's what we use when we say unused premium. So there's not a lot of risk in these plans. So I'm going to back up here real quick. When we talk about risk of the plans, there is no early termination or any sort of penalty for canceling the plan earlier than the 3-year plans. And with the refund of unused premium, there's a 10-day free look period. There's not a lot of risk to your client by getting locked into something that maybe won't work out for them.
Bill, can I just jump in here real quick? And
Sure.
Now let's just step back. Are these the same parameters, these billing parameters? Are these the same parameters you have for the typical 1-year short term that we discussed earlier?
Now, when you talk about parameters, you're talking about refund unused premium.
Yes, and the the EFT being the preferred method with credit card and
yes,
yeah,
that's right. All of our plans, Jeff, are
okay.
and United Healthcare being the biggest, the biggest carrier in all of, whether it's group, employer-based, Medicare, Medicaid,
Yeah.
individual plans, the TRICARE, the military contract. We have studied this thing 10 ways to Sunday, and EFT policies stay on the books longer. I couldn't tell you, Jeff,
Okay.
how often we get calls into our claim center on all of our different apartments. Hey, we were in the hospital, we filed the claim, you denied the claim. When our claims people look up the claim, they notice that that there was a default on the policy because of non-payment of premium. Now the client was notified and reached out to, within that 30-day cancellation period, but they didn't respond. Who knows?
Yeah.
Maybe it was the junk mail, but they don't have coverage. And so that's why these policies stay on the books longer when you go EFT versus credit card.
One additional question. At one point, sorry to interrupt, but one additional question. I recall, maybe it was a while back, but there was like a lump sum payment option. Is that even possible?
When we came back with the short terms, the company did not go back to that lump sum pay option. I love that as well, because you could save about 18% off the premium price. A lot of customers paid that, and back then we did refund unused premium on that as well if they had paid for 12 months and only used 6. No, don't do that anymore. Doggone it.
Yeah, no paper checks. We're done with that. Okay. So I greatly appreciate the clarification on that. Thank you.
Sure. Well, thank you for asking the question. I'm going to give you, Jeff asked me to give you a quick look at some of our ancillary plans, which as everyone knows, with the deductibles going higher, we really need to offer some solutions. God forbid something catastrophic happens or they're in the hospital. This slide that you see right here, this was on our broker flyers that we sent out. If you look at the bottom on the plans, the Advantage Guard, that's the product that, for those of you that sell Medicare Advantage plans, that's the product which pairs very nicely. It's a hospital indemnity, but it does cover a lot of other options. For those Medicaid folks, the issue age is 60 to 90. If you look down through there, accident-wise, which we're going to talk briefly about here in a second, critical guard, which is critical illness. You can see the issue ages. So these can be sold for the pre-65 or the post-65 crowd. All guarantee issue. We also have a couple simplified issues on the Advantage Guard and the critical guard, which if they're simplified and they go through some sort of simplified underwriting, that does pull down the monthly premium amount. So if they're underwritten. So why supplement coverage? This is a slide that I threw in. This is one that I threw in on critical guard as an example. But why should your customers consider it? 44% of Americans find it hard to afford health care. I know that's no surprise to anybody on the phone call today. 30% of Americans find it difficult to understand out-of-pocket costs with their health insurance, and 41% of Americans have debt due to medical or dental bills. So that's really the why to offer your clients ancillary plans. Jeff asked me to speak a little bit about our hospital-wise plan. Hospital-wise plans really are designed as an optimal supplement to the client's primary health insurance plan. Hospital-wise is sold more often to supplement high deductible major medical plans like ACA plans. Many of your clients may not expect something major to happen like a hospitalization, and they probably really don't have a financial plan for something like that. And that may be the best reason for you to offer them this coverage. It's help for the unexpected. This coverage can help alleviate or possibly eliminate some of the burden of the out-of-pocket medical expenses. The hospital-wise benefits are all per covered person. What you'll see here is just like what you and your clients, again, will see in the brochure. Basic, Bundle 1, and Bundle 3, we have 3 different hospital-wise plans, all pay a benefit of $1,000 per day for inpatient hospital confinement. The hospital confinement could be due to sickness or injury, and this includes observation periods of over 24 hours. Basic, Bundle 1, and Bundle 2 also pay a benefit of $1,000 per day for hospital observation for periods of 12 to 24 hours. The hospital confinement could be due to sickness or injury, and this benefit is paid in lieu of the inpatient hospital confinement benefit. The benefit is limited to a maximum of 4 days per period of confinement. In addition, Basic Bundle 1 and Bundle 2 all pay a benefit of $1,000 per day for intensive care unit ICU confinement. The ICU confinement could be due to sickness or injury, and this is paid in addition to the hospital confinement. So if your client is confined to an ICU, they'll receive both the ICU and the inpatient hospital confinement benefit up to the listed maximums. So far, you can see that Basic, Bundle 1, and Bundle 2 are identical. You'll start to see the plan differences as we look at the additional benefits. Again, this information is just like what you and your client will see in the brochure. These are screenshots that I took from the brochure. As you can see, hospital-wise Basic doesn't include any additional benefit. That's why it's the lowest premium of the 3 plans. This information applies only to Bundle 1 and Bundle 2. Bundle 1 and Bundle 2 pay both benefits for outpatient care at an emergency room, urgent care facility, or a doctor's office. These visits can be due to a sickness or injury, and the fixed benefits amounts vary for the 2 plans. Emergency room benefits are $500 or $750 per day, urgent care $250 or $375 per day, and doctor office visits $100 to $150. These benefits have a combined max 4 days out of pocket per calendar year. For surgery performed at an outpatient surgical facility, Bundle 1 pays $1,000, Bundle 2 pays $2,000. There's a calendar year maximum of 4 days. For outpatient major diagnostic testing, bundle 1 pays $500 per day, bundle 2 pays $1,000 per day. Outpatient major diagnostic exams include CT scans, MRIs, PET scans, angiograms, CTA scans, EEGs, and EKGs. So that was a really quick look at the hospital-wise plans. Now let's take a look at the accident-wise plan, which is our most popular accident plan. What really sets our accident plan apart from other competitors on the marketplace? We have a very simplified plan designed that focuses on fewer, more commonly used benefits. We've extended the issue age for seniors up to age 75, which is, guarantee issue, remember, with lifetime renewability. And we have improved hospital admission, emergency, and diagnostic benefits. What I want to note, folks, on this screen here, if you look at the top, we've got 3 different accident-wise plans: the plan 10,000, plan 15,000, and plan 20,000. And we've coincided the name of the plan with the amount of hospital admission payout of 10, 15, and 20. And we tried to align the other benefits on the 3 different accident plans with the plan name. So it sort of makes it easy for you to remember the different coverages. Here's a look at the issue age, again, 18 to 75 for the primary. There are no child standalone plans. The rate is the same for all issued ages, male or female, unisex, whether they smoke or not, doesn't make any difference. Guarantee issue for all ages, no health questions, no height, weight. They're guaranteed renewable based upon the policy provisions. And there's, of course, a 10-day free look period on those plans. This is another, I'm going to share these with you real quick here. There's another accident category that we have other than accident-wise. We call it our Pro Series. I will tell you, this accident Pro Gap is probably the most popular plan that we offer as an ancillary plan, or a cross-sell opportunity, if you will, to the ACA clients. Now, this accident program is not guarantee issue. You see my blue bubble over on the left. But we like this plan, and the way our agents sell this plan is it includes 3 different plans: $2,500, $5,000, or $10,000 accidental injury benefit. But we've also paired it with critical illness benefits of $25,000, $5,000, $10,000 should your client get diagnosed with a critical illness, heart attack, cancer, stroke, things like that. We've also paired it with an accident, death, and dismemberment benefit amount, and also a $2,500 hospital admission amount. So when you were talking to your clients about that, it's really going to cover them 4 different ways with a $250 accident deductible. Very popular plan, low monthly premiums on this, pretty easy cross-sell with a high deductible ACA plan or any other high deductible plans. This is another yes.
I just want to jump in real quick.
Yep.
Going forward, I just saw a press release from the feds yesterday. They're considering raising the bronze deductible to $12,000 for an individual next year for 2027. So all the more reason to take a closer look at these ancillary plans and to help you bridge those gaps. So
you're exactly right, Jeff. And I can tell you from, UnitedHealthcare's giant call center, I used to listen. I used to do like coaching and consulting with a lot of the agents and a lot of the people on how to handle those phone calls. And I cannot tell you how many times we had phone calls come in thanking us and thanking the agents for providing the ancillary plans, whether it's accident, critical illness, hospital plans. Clients really don't understand the need for that. But if something catastrophic happens, that they are hospitalized or they do have an accident, or God forbid, they're stricken with a critical illness, they are so appreciative of having something to help them with that out-of-pocket cost. The last thing they need in a catastrophic tragedy situation is have to go down to the bank and pull out $12,000, Jeff, to help pay off a deductible. So these plans really are, worth their weight in gold. This is another product within the Pro series. It's Accident Pro Guard. This is a guarantee issue option. You'll see my bubble on the right. Primarily, there's two different plans with the Pro Guard that the client can choose, 5,000 or 10,000. And again, we've combined the accidental payout, the critical illness payout. You can see those are pretty doggone good down there on the critical illness, and also an A and D policy, all in one product. So really nice coverage for the client. Critical Guard. I'm just really going to quickly take you through. You all are the PhDs in the business. You talk about health insurance every day, and as you know, most of the clients you talk to, they rely on you, to recommend products. And clients may very seldom shop for insurance, and if they do, it's probably once in a blue moon. So you really have to explain the product and the need for the product, before you ask them to pull out the checkbook and agree to a big monthly premium. But what we've come up with at United Healthcare in positioning a critical illness product is to ask the client 4 questions. Number 1, who do you know that's had a critical illness? Who do you know that's been diagnosed with cancer, had a heart attack, had a stroke? By asking that question, it really helps to personalize the experience for the customer, and it puts the insurance solution that you're going to offer them in the proper context. The follow-up question to that, is it expected? Was it expected? The answer is almost always going to be no, and that helps to position the need for the solution that helps to protect the customer from things outside of their control. Number 3, follow-up question, did it create an emotional or financial stress? The client will almost always answer yes, and that really does help to reinforce the need for the financial solution that you're recommending and offering. Final question, would a lump sum check help ease this person's burden? Again, the answer is almost always yes, and now you've brought the customer really full circle as to the importance of having a critical illness product. Critical Guard, how it's different. Increased issue ages from 59 to 90. Guarantee issue options up to 75. We have a maximum benefit, which was increased from 50K to 100,000. Lifetime renewability. And really do have a lot of different options here. There's really 4 different critical illness plans. Critical illness, and this includes everything, heart attack, cancer, stroke, other critical conditions. We have a standalone cancer and heart attack stroke plan, a cancer plan, and a heart stroke plan. Some other plans that we have, I mentioned earlier, dental-wise max, vision-wise. Real quickly, I know we're getting close to time here. Our incentive for what we call the comeback, and we always have promotions for agents, incentive for agents, to create some excitement on the products. This one runs until February 28th, and you can see down in the chart, once you hit 20 plans with us, any mix, any match policies, I should say, when you sell 20 policies, we retroactively pay back to policy 1. And on the tri-term medical, $500 over and above your normal commission, and all the ancillaries are at the bottom. We always have exciting bonus incentives going on for you all. There's also a first 15 broker bonus for any new agents that are contracted within the first 120 days. And this runs all year. We pay an additional bonus there. I wanted to also share with you that every client that signs up with us will have access to the United Healthcare UHC member hub, where they can manage their payments, update their address, view their policy documents, they can get their ID cards, they can find their provider in network, and they can manage and submit member paid claims. Our broker service center is available for all of you to help at any time at 1-800 474-4467 to enter your broker portal. As a reminder, it's www.uh1.com/broker. Here's a little cheat sheet on phone numbers. And with that, I wanted to thank everyone for attending.
Fantastic. Thanks, Bill. We'll open up some questions. So a few minutes here before the end of the time allotted for this. So by all means, ask away. I just want to make a couple comments here. These products, unlike the ACA, these products pay commission based on percentage, not, a cap of $18 per member per month or $20 per member per month. These pay on a percentage. Generally, it's between 15% and 25%. And so it's a great deal more lucrative, as Bill showed in that illustration earlier. It's something, it's really beneficial to every agent and agency in that revenue standpoint. So keep that in mind. So I don't see any new comments or questions. I'll just open and close it again. I really appreciate everybody joining us today. This will be posted out on our website in the Resource Center, this whole recording of the presentation. And if there's any additional materials you need from UH1, give me a call and we'll get them over to you. Don't forget, May 6th is our third annual Individual Expo in Dayton, well, actually Centerville. So keep that on your calendars. And to kind of wrap up here, I think Bill, you did a fantastic job, and everybody, I want to thank you so much for joining us this morning. Bill, any final comments?
Nope. Thank you all for attending, and of course, thank you, Jeff, for the great partnership that we have with Cornerstone. We at UnitedHealthcare appreciate it very much.
Fantastic. Thanks, Bill. We'll see everybody later. Take care.